Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be doing a brief stock analysis on Lockheed Martin Stock, ticker symbol LMT. And over the past few weeks, they've had some astronomical explosions in their stock price. So I wanted to take a look at some recent earnings and some of the metrics and try to talk about maybe if that is warranted. And it's just pretty interesting to see since compared to the rest of the market, it's pretty much going in the opposite direction. So first of all, we're just going to look at the earnings from the fourth quarter and full year 2021. So net sales around $17.7 billion in the fourth quarter and $67 billion in 2021 total. Net earnings were about $2 billion or $7.47 per share in the fourth quarter and $6.3 billion or $22.76 for the full year of 2021. And they also returned cash to shareholders of about $2.1 billion of share repurchases and $762 million of dividends in the fourth quarter for a total in 2021 of $4.1 billion of share repurchases and $2.9 billion of dividends. So that's pretty cool. So like we said, net sales around $17.7 billion, which was up from 17 billion in the fourth quarter. So let's actually just look at this kind of chart because it gives us a good idea. So we look down here at one of these. Actually, let's look at this one right here. So they have net sales here of 17.7 billion compared to 17 billion from 2020 from the fourth quarter. So not a ton of growth there, but a little bit. And for the full year, 67 billion compared to 65.4 billion in 2020. So again, just a little bit of growth, in the revenue side of things. And looking on to earnings, they had about $2 billion in earnings in 2021 fourth quarter, compared to about 1.8 billion 2020 fourth quarter. So again, a little bit of growth there, not a ton. And for the full year, $6.3 billion in earnings compared to 6.8 in 2020. So they actually earned a little bit more in 2020 than 2021. And obviously that's not a good thing, but as we'll look here in a second, their earnings over the past 5, 10, 15 years are still on a great trend, I would say. And if we look down here, so this is the 2022 outlook. So net sales around 66 billion. They're indicating maybe a slight drop in sales overall, but they list earnings per share. They are aiming or projecting about $26.70, which is about maybe 10% higher, probably closer to 20% higher really than 2021 earnings per share. So that's pretty interesting. And then I also like to look down here at the different segments and just kind of look at how diversified they are sort of. So they have this aeronautics segment, which is definitely the biggest segment of their business, which is about $7 billion of revenue out of $17 billion. So that's more than a third of their revenue. But then these other three segments, missiles and fire control, rotary and mission systems, and then space, these are all in the $3 to $4 billion ranges of revenues, and they're all pretty similar in revenues. So obviously there's one segment that's a fair bit bigger, and then the other three segments are around the same size. So the point is that it's not just like one segment dominating with the vast majority of sales and profits and all that kind of thing originating from that one segment, and that they're fully reliant on that. With Lockheed Martin, they're definitely spread out over lots of different types of business and products. So that's good to see. And some of this stuff, like, they can't really even talk about to shareholders because it is classified. So the next thing we're going to look at is the dividends. So their current yield is around 2.5% right now, with an annual payout of $11.20. Payout ratio looking pretty good at around 40%. So they definitely have plenty of room to grow their dividend. Like we said, their earnings for 2021 were about $22.70, and they had a payout of around $11.20. So that makes sense. Their payout ratio is definitely less than 50%. The 5-year dividend growth rate around 9%, 9.25%, and they have been growing the dividend for around 20 years. So not like a super long time, but definitely long enough to show us that they've probably been through some hard times and have been consistent with that dividend. And we can sort of look at the dividend yield right here over time and give us a opportunity to kind of look at where the dividend yield is right now. So we can see right now it's below 2.5%, which most of the time over the past few years it's been above 2.5% or right around 2.5%, I would say. Just a few months ago, the dividend yield was above 3%, and it was, above 3% during the March 2020 crash, and then also in 2019 for a little bit of time. So definitely not the absolute best time, I would say, just because of, what has happened with the stock prices. We'll look here in a second. But the key there is that they are, growing the actual dividend value. And we can look at the earnings as well to see how they're growing their earnings. And like I said, the last quarter or two, earnings have not grown. They've actually dropped just a tad bit. But we can see over the last, 10, 15 years, they've had a lot of earnings growth. And so even if the earnings growth did not continue quite as rapidly, I think there will still continue to be growing those earnings like they're projecting for next year. And so right now the PE ratio is right around 20, which compared to the overall sector, we can look that the overall sector average for the industrial sector is right around 22. So Lockheed Martin, even right now, they're still a little bit below that average in terms of a PE ratio. And if we look specifically in the aerospace and defense segment, the average is around 21 for that industry. And you can see Lockheed Martin right around 20. Raytheon, a similar company, has a PE ratio way up there around 38. So that's sort of interesting to see. I guess Northrop Grumman could be considered kind of similar, has a PE around 10. So they're kind of in line with some of their competitors. And also I would say they're a little bit lower in PE ratio than some of their other competitors, which could be a good sign. But fundamentally, as we've seen here, it kind of looks like Lockheed Martin's a pretty good company. But when we look sort of on the technical side and the current price, in my opinion, it's really not looking at all like the best time to be buying. So if we look at this chart here, this chart is really only showing back about 6 months. So the stock price right now is around $458. And we can see just over the last week or two, the stock has rallied from around 400 to around 450, and even the previous month or two before that huge rally, they'd been climbing steadily from around 330 all the way up to 400 and then 450. So honestly, from a technical perspective, not really a great time to be buying. I think this is an all-time high for their stock, and you can see down here the RSI is 75, 70, 80. So technically speaking, it's not really a good time to be buying at all. If we go back on the 5-year chart, yep, it looks like that is the all-time high of $462. They did get pretty close to that, around 440 pre-pandemic, but they have finally recovered to that level. And honestly, Lockheed Martin is a great company, and over the past year or two, I think has been a great buying opportunity, and I've definitely been taking advantage of that. But right now, in my opinion, just because of how much they've run up over the past few weeks, and I just don't see it as a good opportunity, especially when you look at the opportunity cost, because a lot of other companies that are also great companies have over the past few weeks or months seen a lot of decline in their stock price, and so now it's a better opportunity for those companies, and maybe not the best opportunity for Lockheed Martin, even though it is a great company. So let me know what you guys do think of Lockheed Martin in the comments down below, and just want to thank you guys for sticking around to the end of the video, and I'll see you in the next one.